Fine. Okay. Today is what? Today is 3rd, is it right? 3rd October. Fine. Now, what is basically how it will work? Is it right? If anybody is joining, you can add them. Is it right? Without my permission, you can add them. Is that what is the most important thing that matters to us is how, see what you are doing as an auditor. Understand this, you can understand everything. Okay, nothing is difficult. As an auditor, is it right? What you want to do, you want to make sure that things should work right. Is it right? You want to make sure that the errors should be less, and want to make sure that the risk should be less. Is it right? As an auditor, what you are doing, you want to make sure that the risk will be acceptable level. Is it right? The risk will be there. Is it right? Risk should be at a minimum acceptable level. Is it minimum acceptable level? That's what it says. Now, what is the risk? That's very, very important. Is it right? Whatever, sometimes how things will work, sometimes how things will not work. Risk can be measured. Okay, we are doing what? You will surprise to make sure that in this way there are some calculations. Is it right? These calculations is not going to be related to this lecture. It will be there for the next 7 lectures. Okay. Now, what we are understanding, first we will understand what is the risk as such. There will be a risk, is it right? There will be a risk, that risk related to financial statements only. Is that risk related to what? Risk related to financial statements only. Is a risk related to how much is the risk? That's a big question. Is it right? Now, what is the materiality? Materiality is the amount. Is it right? The amount, the percentage. Is it percentage? Percentage. What is the percentage? Is it right? 1%, 2%, 5%. Is it right? What is the amount of percentage you are going to have with respect to the risk as such? Is it right? Is that what is the amount of 1 minute? I will just make sure that okay. Now, what is the percentage? That's what the most important thing. What is the percent? What is the amount? See, when we are talking about the materiality is the amount. Material is nothing but the amount, and very important. It will allow us all through the time. Is it right? It will always follow us in each and every lecture as such. Materiality is based on what? Materiality is based on revenue. What is the sales? It's a materiality is based on profit after taxes. Materiality is based on the amount of assets. Is that materiality is based on? And this is the very standard one. Is it right? It is the rules as per the ACCA. Is it right? If there is a revenue, maximum how much? Maximum 1%. 1%. If it is less than 1%, fine. I'm not saying that less than 1% it has to be accepted, but it is manageable. Okay. Profit. Profit after taxes. How much? Because amount increasing, the materiality will increase. Is that amount is decreasing, the materiality, the percentage will increase. Assets, is that some people say that 5 to 10%. There is a specific definitions are given. Is it right? There is a specific definitions are given where we are going to find out, we will work out on these points as such. Is that these standards are not only related, these percentages is not only related to this lecture, but this is related to other lectures which we are going to follow it up. Okay. Now, this is the first one. What is the risk and what is the materiality? Most important thing. See, you are an auditor. Got my point? Now you are auditor. They will assign you. Okay. You are an auditor. They will say that you are going to do something related to telecom company. Is it? Telecom company. You are something related to airline industry. You are something related to what? You are doing audit with respect to what? Hotel industry. Okay? Okay? You are doing audit with respect to what? Automobile. Now, the most important thing for you, understand carefully, and it is very, very important. Whenever you have been assigned an audit task, is it right? First, you should know that which type of industry it is. Is that which type of industry? It is an airline industry, it is a hospitality industry, it is an automobile. Most important thing, and it will again, I am saying this is the basic beginning of the audit which you are doing. I am very, very slow at this point of time. Okay. First and foremost, what you have to do, understand the entity. Entity is nothing but what? Understanding the firm. Okay. Understanding the industry and its environment, where it is working. That's very important. Is it right? What you are doing, where it is working. Is it right? Environment means you are talking about who are the owners, who are the competitors. Is it right? I will write very clearly. Is it right? For your understanding, environment is nothing but who are the owners. Is it right? Who are the owners? Next, what I told you, who are the owners. Second one is who are the competitors. Is it right? Who are the competitors? And what is the capital structure? Is it right? What is the capital structure? Where it is located? All the things which we are going to work it out in terms of environment as such. Is it? Next, assessing the risk of material misstatements. Is it right? Assessing the risk of material. How much is the misstatements? How much is the error? Is it right? Percentage of error. That's very important. Material misstatement. How much you assume you are an auditor and you are going to a client place. You will see that how many errors they have done. Is it right? How many mistakes they have done. You will see what is the audit report. Is it right? In that you will check that yes, this many mistakes has been happened. Is it right? This many errors have been done. Sometimes what will happen? Errors will be huge, but amount will be less. Is it right? Sometimes what will happen? The errors will be high. Is it right? But what happens? The amount will be less. Here the amount is otherwise called as material. That is the only one definition we are talking about. Material means the percentage of amount, how it is going to work it out. Is it? The last one which you are going to know is how you are going to assess the risk as such. Is it? Very important things. Is it? And I am telling you in the beginning, this will account for us. Is it right? This will account for us almost, it will be 14 marks. No exam will be there without this question. Is that? No exam will be there without this question. Is it right? So we have to be very, very careful on this area. Okay. Now Identify what we are doing. We will, as simple as that. We are identifying the objectives of the audit, how we have to conduct audit as per ISA. Is it right? We want to know what is the how we have to plan. Is it right? And how you have to plan and how you have to perform audit. And this is the one word which we are going to use all through the time. You always be professional. Skepticism is nothing but you have to have always something called as a questioning mind. Always you have to question why, reasons, discuss. Is it right? Always you have to do that. We should not say that whatever, if we don't ask, nobody will tell us. Is it right? You cannot say that before you write a report. Is it right? As an auditor, before you have to write a report, you have to get sufficient appropriate evidence. Understand upon this? We have done somewhere in lecture 2. Is it right? What you have to do? You have to get sufficient appropriate evidence. You have always asked for the evidence. That is your right as an auditor. That is your right as an auditor. Questioning man's professional skepticism. Is that always you should question? That's as simple as that. Is it right? Now, what is the audit risk? Is it right? Audit risk. See, one question will be there on this. Is it right? Audit risk consists of 3 things. Is it right? One, we are talking in terms of control risk. One, we are talking in terms of inherent risk. And one, we are talking in terms of detection risk. I will ask you this again and again. Is it right? I will ask you this again and again as such. Fine? Good. Yes. Salaam alaikum, Aisha and Fatima. Fine?
Walaikum salam, sir.
Yeah, good. Is that? We will do this. Okay? I am very happy that everybody joined. Okay? Now, good. We will do that. Audit risk. Very easy. I am telling you this. Wherever difficult, I will tell you difficult. But wherever easy, it's not difficult at all. I am telling you very simple. If it is there, it is my responsibility. Okay? We will talk about what are the components of audit risk. Audit risk are what are the different components of audit risk? One is control risk, one is the inherent risk, and one is detection risk. Okay? Explain the audit risk in the financial statements and what is the audit response. On this we will have question. Got my point? What they will ask you? They will ask you what is the audit risk, identify audit risk, and what is the audit response. Is it right? This will be there. That's what. You have to, as we have said, we have to identify the risk and you have to, what is the response you are going to work it out on that. Is it? This is the question we will have. Scenario based question or in section B as such. Is it right? What is the audit risk and what is the audit response? What is the concept of materiality? I told you materiality is in terms of amount, and we are talking about what is the performance materiality. I told you when we say it is a performance materiality, we are talking in terms of what? Performance materiality in terms of revenue, performance materiality in terms of profit after taxes, performance material. We are comparing. Is it right? When we say it's a revenue, whatever the amount of revenue, the amount of revenue 1% of the revenue. If it is less than 1%, performance is good. If it is more than 1%, performance is not. That even there is a benchmark with respect to profit after taxes 5%. With respect to assets, sometimes they will say 1 to 5%. It is not like that. There is a clear-cut table is there. Is right? We will calculate. That is the reason we will explain it and we will calculate. Is that we will calculate. That's what it says. Is a small calculation, but they will give a good weightage of marks for this. Anywhere they will ask you, is that either it is related to, see, once you are talking about audit risk, this will be there for all the lectures. Is it right? We will cover this. Now, what we are doing, this we will do in the next one. Okay, this we will do in the next lecture. Is it right? We will do about the fraud, all those things. Is it right? We are talking about the most importantly, understand why there is a need. Is it right? Why there is a purpose to understand the company as such. Is that you are going to a banking firm, you should understand what the bank will doing, how the transactions work in the bank. You are going to an airline industry, you should know how the airline industry will work. The system of banking is different, the system of airline is different, the system of telecommunication is different. Okay, every company will have the different way of working. For in order to know, we have to know how, we have to understand the entity and its environment. Okay, another important question will be there on this. A part of the question, is it right? A part of the question will be, they will not give 20 marks straight away. They will divide the question under small segments. Okay. Next, when you are doing this, we have to know what is the nature, purpose of analytical procedures. And again, we are going to analyze some way. Is that you have to refresh your knowledge. Somewhere you have done this in the previous cases. You have done ratio analysis. Is it? We are going to do ratio analysis and we are going to make a comparison. Analytical means we are comparing for what? We are comparing for 2 years. Is it? We are comparing 2 years. Specifically with respect to what? With respect to ratio analysis. That's all. Is that you can interpret the key ratios and analytical procedures, and this we will do in the next lecture. Okay, this we will do in the next lecture as such. Okay. Now, what is the concept of risk? How we are going to assess the risk? Is it right? We are going to assess the risk. Is it right? Basically with respect to professional skepticism. We will cover. I told you what is professional skepticism. Professional skepticism is nothing but it is a questioning mind. Always you have to question. Is that? Always you have to question it. Is that? Now, how you are going to assess the risk? You are assessing the risk with respect to the entity and its business environment, where you are working, for which firm you are doing audit. That's very important. You are doing audit for automobile industry. The approach will be different. You should understand how the automobile industry will work, what are the inventory, how they will purchase, how they will sell. Immediately you will go to a banking firm. Again, what will happen? There is a comparatively opposite sides. Is it right? You are going to a service industry, telecommunication. It is a different one. Is that? That is the reason, most importantly, we have to understand the entity and its business environment. Okay. Now, I told you audit risk. Audit risk consists of what? Audit risk consists of what? How many things are there? Fast. Who will tell fast? Audit risk is?
Inherent and detection.
Inherent risk, detection risk, and the control risk. Is it right? Now, materiality you have understood. Now, almost, see, first 10 minutes, I will give you a complete picture of the entire lecture. That's all. Nothing is there. Materiality and performance materiality, I told you, in terms of amount. And we have to compare. Is it right? Next. FX, it is a part of the system. Is it right? But automatically they have moved it to the next lecture as such. Is it right? We are doing analytical procedures. Is it analytical procedures? We are comparing. We are comparing to 2020 and 2021. Is it right? We are comparing 2 different years, 2020 and 2021 as such. Okay, we will do this. Now, every other lecture will have slide with you and making it little bit more specific. Every other lecture. Is it right? Without this, we are not going to continue anything as such. You are first, what you will do, you will plan an audit, you will understand the entity and you will assess the risk. Isn't it? Assess the risk and we select the procedures. Now, what happens? Still, it is too early, okay? It is too early. But I'm telling, you will have the controls. Is it right? Controls means for everything you will have some checking. Is it right? If you will have the controls and you will test whether the controls are effective or not. Is that definitely if controls are good, definitely what we'll do, you will go on the right. If you will go satisfactory, you will not do any major procedures. Okay, you will restrict the procedure. If controls are unsatisfactory, you will report this to the management, and what you will do, you will do full substantive procedures. Just keep it in mind. I am here to explain you at the appropriate lecture. Okay, that's all. Now what you are doing, first you have to plan the audit, you understand the entity, and you assess the risk as such. This much we are going to do in this lecture as such. Now let's remind. Is that now almost I am doing the revision for the moment I go forward, I will recap the things what we have done. Let us remind ourselves, what is the objective of the auditor? The objective of the auditor is to make a reasonable assurance. Is that they want to make a reasonable assurance. In other words, it is making sure that we are talking in terms of true and fair. As a financial statements which are going to be what? Free from material misstatements. Whether due to fraud and error, is that what they are doing? They have to express the opinion. We have done one multiple choice questions. What the auditor will do? Auditor will only give an opinion. That's all. Is it about the financial statements are prepared? What they will do? They will give the opinion that whether it is done with respect to the financial reporting framework or not. Is it as per what? As per international standards of accounting. Is that this is what it says? Is that in the simplest way how the things will work? Fine. Now, what is that we have done? One of the standards. Which standard we have done in the previous case? Any idea? Which one we have done?
210.
2 1
10.
What is that?
About the terms of audit engagement.
Yes, terms of audit engagement. Is it? Another one, ISA 200. It is overall objectives. Is it right? Overall objectives of the auditor, how to conduct audit in accordance with international standards of accounting. See, they will not ask you, I am saying again and again, they will not ask you this, but the moment you mention this, wherever it is applicable, maximum in the entire subject, if you take all the lectures, it will be not more than 10. Not more than. I think it is 8 or 9 if I calculate precisely. Is it? You just wherever it is working, you just mention this and see the difference. Got over? What we are doing? We are talking in terms of the overall, what is the overall objective of the audit in with respect to the accounting, in respect to international standards of accounting as such. Now, is it? This is what the concept of risk as such. Second one, what you are doing, I told you, very professional skepticism. In order to do this, in order to make sure that we are achieving the things, overall objective, the auditor definitely, we have to plan and we have to perform. Is that? With what? We have to plan and perform with professional skepticism. With a questioning mind, that's what it says. You have to be what they say, they have mentioned it very clearly that you should have a concept of what? A questioning mind. You see, where the auditor will be successful, you are an auditor. Yes, you are an auditor, you are going to the client place and you are going to say that yes, I have done the audit, everything is fine. Then there is no purpose. You have to raise the questions as such. You have to identify the errors. You have to identify anything that has been as a fraud. Understand point? That is the basic thing. You are not going with that mind, but you should be in that state that yes, what the things will go wrong. Got my point? Till that point, till the last point, you have to get the evidence as such. Is that what it say? It have to apply your judgment. Is that what the auditors will do? This is one of the limitations of the audit. Is it right? You are working on a judgment. Professional skepticism is nothing but an attitude which includes a questioning mind. You have to be alert to conditions. Is it right? This is very, very, very specific. What happens? What will go wrong? Where there will be a misstatements? Is it right? Now, when you are talking about the misstatements, you have the errors in accounting. Any idea about this? Yes or no? How many types of errors are in accounting? How many types are there? You have three types of error. Error of principle, is it? Error of omission and error of commission. Is that you have to be alert, as simple as that. This you have done somewhere in the beginning. Is that you should be being alert to the conditions which may indicate a possible misstatements. Due to the misstatement happens either in some cases due to error or in some cases due to fraud. Is that's the basic thing? Is that and whatever the things that see very simple, whatever the evidence they will provide us, we should not simply rely on that evidence. Is it that as an auditor? Is it as an auditor? You should not simply rely on the evidence provided. Is that evidence provided by the client? Is that this is the most significant part? Is it right? This is the most significant part whenever we are going to assess or when we are going to make it a point. Is that now you understand what is the professional skepticism will be there all through the slides. Okay, that's where we say now. You should not only have professional skepticism, but you should also have your judgment is very important. Is that your judgment is very important? Because why your judgment is important? Because somewhere it has been mentioned. What you are doing, you are talking in terms of your opinion. How we will have judgment? That's what it says. See, everyone will not become an auditor. Got my point? That is the reason they will grill down. They will grill down so much before they will give you and then they will give a certification. Is it right? The application of relevant, you should have what? You should have these things. You should have very clear training, most important. That is the reason when you do the ACCA, inshallah, after that immediately you will not become a senior position. By experience you will go to the higher level. Is it right? You will have the training. They will give you a lot of training. You should have a sufficient knowledge, and based on that, what is most important is you should have the experience in making the informed decisions about what is the course of actions and what is the things we are talking in terms of audit engagement. What are the, on what conditions, pretext we are going to work it out. The following require professional judgment. Is it right? What in professional judgment, how you are doing? You are talking in terms of materiality. In terms of, again, I will write here. Is that we are talking in terms of what? What is the amount? And we are talking about the what is the audit risk. Is it right? You are talking about the control risk, inherent risk, and detection risk. Is it? Now determine the nature, timing, and extent of how much time it will take for to the audit procedures. They will ask what is the procedure. Procedure means you should not jump. Procedure, why this paper is, people say it is difficult. When you say procedure, you have to, what you have to do? You have to do step by step process. You should not jump. Is it? You should not jump. Assume you are talking in terms of sales. We will do this. When you are talking about the sales, definitely what you have to do, you have to check sales invoice. Is that? Then we have to say that whether it has been delivered. Is it right? Then we have to say whether it has been received. Is it right? Then you have to say what you are doing. We want to make it a point. It has been reconciled. Is that? This is the procedure. Understand what? Procedure means first what is a step by step approach you have to take it. It's not like that immediately we will not say it has been received. We will not go and say that we are going to reconcile. In order to reconcile, there should be some audit procedure is there. Is it right? Next, we are talking about what? We are evaluating the most important thing. We are talking about sufficient appropriate evidence. We have collected sufficient evidence or not. That's very important. Drawing the conclusion based on the evidence, and subsequently we are talking about whether the management has applied the financial reporting framework also. That's the reason they are talking about I'm not saying it again. They are talking about the national laws. They are talking about the international accounting standards, international financial reporting standards, and international standards of auditing. International standards of auditing applied to auditor. Other things will apply to the client as such. Is that in order to obtain assurance, the financial statements free from there, the auditor must consider from where we are going to get the information and how and from where misstatements are mostly likely to arise. See, this is the way. Is it right? Now, assume. Is it right? Assume. You are doing an audit for what? You are doing audit for cash. Is that you are doing audit for the cash? You should know where the problem will come. Is it right? You should understand where the problem will come at the place of teller. The problem will come at the place of reconciliation. Is it right? The problem will come at the time where we are receiving, or the issue will come at the time of payments. Is that where the actual risk is there? That's what we have to identify. If you are having 1, 2, 3, 4, is it right? If you are having 1, 2, 3, 4, see, is it right? All 4 are not going to be ineffective. Is it right? One place will be one assume people where we are talking about the payments. Payments is one weak link. Is it right? I will put like this. This is the weak link. When there is a weak link, what will happen? Here there will be a high risk. That's what it says. The auditor needs to consider how, is it right? How and where the misstatements are most likely to arise. Is it as simple as that? Is that some departments will be good, some departments will not be good, some persons will be good, some persons will not be good. Is it right? The thing is, you have to precisely, you have to carry what? You have to carry the risk assessment. If the risk is high, you have to do lot of procedures. If the risk is less, you have to do restricted procedures. Is that? I'm writing this. Is that? What you are doing? First, you have to identify the risk, and based on the risk, to ensure. See, we are not going to use check. Okay, all the to ensure means to make it more confident. Very important verb. This is the audit language. We are going to work it out. To ensure, we have to ensure. We have to assure that the areas which these are most susceptible to material misstatements, and they have to investigate. All the time we have to make ensure. Assurance has to be given. Is it right? That's first thing. We need to understand what is the risk in the correct context. Where is the risk? That's what it says. Risk will be what see, the word is difficult for everyone to understand. Is that so? For somebody this is the less risk, for somebody this is the high risk. Is that for somebody fine, sales is less risk. Is it right? For someone sales will be high risk. If you identify, is it right? Or you make it sure that we are doing something for the banks. You are doing an audit for the banks. The risk is high with respect to cash. The risk is high with respect to evaluation of loan application. Is that the risk is high with respect to evaluation of loan application as such? Is that we are talking in terms of airline industry? Is that airline industry? The risk will be there. The risk will be high with respect to what? Technology. Is that so? The most important thing is, as an auditor, they will assign you an audit client. You have to go tomorrow. From tomorrow, you have to start the audit for that company. First and foremost, you have to do some homework. What is the homework you will do? You will read. You will read what is that, which company I am doing, what they are doing, what is the process they will do, how the transactions will work. Is it right? How they are preparing, how they are recruiting people. Is that each and everything you have to go in detail. That is the point where you are talking about understanding the entity and its environment. Is that we are having two different types of risk. One, we are talking in terms of business risk, which we are not going to focus that much, and one we are talking in terms of what? We are talking about the audit risk. Is that there will be a question in multiple choice questions. Is that in MCQ they will ask whether it is a business risk or it is a audit risk as such. Fine. Slowly and steadily we are working out. Business risk is inherent to the entity and its operations. Business risk is there. Is it? See the thing. What happens if see nowadays you make it a point, very simple. Is it right? You are talking one business is not working, other businesses will also not work. Is it right? You are talking about the COVID-19. COVID-19, it is what happened. This is a business risk for all the companies. For entire world, it is a risk. Is it right? Means one is not working, other is not working. If there is a conflict between two different countries, definitely it is a business risk. Is that it's happening? It will have impact on other countries also. Inherent means it is the part and parcel. Is that it is built in? Is that business risk is nothing but it is a built-in risk. You cannot avoid it. Is it right? You cannot. What is the audit risk? Is that it is expressed in terms of the inappropriate audit opinion. Auditor is expressing and means they are not giving a reasonable assurance. Is it right? They are not giving any reasonable assurance. Understand point? Now that is what it says. It is we are talking in terms of what when they are expressing an opinion and the financial statements are misstated. It's not properly. Now I will tell you one thing. When you are talking about the financial statement, you cannot say that all complete finance. I will not say cannot say that the complete financial statements are having some doubts. We will say that a element, a part, is it right? A portion of financial statements, an activity of financial statements. I will say like this: an activity of financial statements, you will not be clear. In the examination, they will not ask you a complete thing, they will only asking about some activity. Whether this activity is fine related to the audit risk or not. Is that? We will take that into consideration. International standards are required. Auditors to have always you should base your approach towards what? You have to make sure that you have to work it out on the risk. How much material misstatement? Risk is nothing but, in audit terms, with the percentage of material misstatement, the chance of errors and fraud. Is it right? That's the most specific point which you are going to focus. Audit risk has 3 components. Is it? Audit risk is having 3 components. The first one is inherent risk, the second one is control risk, the third one is detection risk. Are very, very important. I will ask you so many times. Okay? I will ask you so many times. Is that little bit first slide at this point, the concept has to be clear. Is that the risk of issuing an inappropriate audit opinion? It may have inherent risk, it may have control risk, or it may have detection risk. What is inherent risk? Inherent risk is the built-in. Is it right? Inherent risk means it comes from generation to generation. From employees, even employees will change, the risk will be there. Is it right? The suspectability of the balance, misstatements, before considering anything with respect to controls. Inherent risk, is it right? Inherent means it is part of the system, is it right? Inherent risk, assume, they gave you example. We will work it. What is the inherent risk? They are saying that it is risk related to the industry, volatile industry. Is that volatile industry? I will give the thing. What is the industry? Oil industry. Is it oil? Why oil industry? Always oil prices, is it right? Always oil prices will increase or will decrease. That is the inherent risk. Oil industry, oil prices will increase or oil prices will decrease. Anything happens. Is that engaging in foreign transactions? Is that you are dealing with a foreign currency, you are dealing with a foreign country, foreign customers. Is that? Definitely there is an inherent risk. Tomorrow what will do? Because if you are dealing within the country, the risk is less. But if you are dealing outside the country, the risk is more. Rapid change of technology. Is that rapid change of what happened? The technology is changing fast. Is it right? You have to adopt that technology, as simple as that. You could not say that we can avoid it. Is it automation? Is that we will introduce some technology and the technology will become outdated very fast. It is the inherent risk. It is the built-in risk we are taking. That is the reason. Is that the more we depend on technology, the risk is high. Is that the less we depend, without depending on technology, we cannot survive also. Just imagine, you don't have internet for 1 hour. What will happen? Is it right? Last month, is it right? There is a power cut. Is it right? There is a power cut. What happens? Instantly, everything is stopped. We are dependent. We are so much dependable. Is it right? That is what we are talking about, the inherent risk. Is it? In terms of the volatile industry, example oil industry, oil prices, in terms of foreign transactions, in terms of technology. Fine. What is the control risk? You don't have controls. Is it right? You don't have controls. What will happen? The risk will be very, very high. Is that? You don't, people, what they will do? You cannot, one person is doing, listen carefully. One person is preparing, another person should verify, another person should authorize. That is the control risk. Is that control? We will take this word again and again. Is that control means you should have proper cross checking. Is it right? That's the risk that the client controls. You have controls, but they are not effective to prevent or detect material misstatements. Is that to prevent or detect material misstatements? What are things? Old or ineffective accounting softwares. Softwares are not updated. It is a control risk. Is it right? So you have all the time passwords will be there. Is it right? All through the time, every week you have, every 15 days you have to change the passwords. Now they are saying it is a biometric system. After some time they are saying that it is nothing is there. Only eye recognition is there. Eyeball recognition is there. What you are doing? You are putting so many things only to make sure that they should have good controls and effective controls. You should not only have, is it right? You should not only have good controls, is it right? But also most important thing is effective controls. Lack of segregation of duties. Is it a lack of segregation? What I told you, one person should prepare. Is it right? One person should verify. Is it right? One person should authorize. We have done segregation of duties in the corporate governance also. What is that? There should be a segregation of the duties of CEO and the chairman of board of directors. Is that? That's what that. Multiple people should do this. One person will receive, one person will count, one person will record it. Is it right? That is the controls as well. Lack of authorization process. Anything is happening, there should be an authorization. Authorization by whom? Authorization by senior management. Whenever you are talking about the authorization should be done by the senior management. Is it? We will do this again. Is that these are the control risks. What are the control risks? They are ineffective accounting systems, segregation of duties, and you have lack of authorization. What is the detect? We cannot detect it. Is it right? The risk that the auditor fails to detect. We don't have the controls. We cannot detect. We don't know what will happen. That's why I say, is that it's like what I told you in the error of omission. You have not entered a transaction. Can we detect the transaction? What is the error? No. If you entered the transaction, debit and credits are wrong, fine. You can identify. If you entered the transactions instead of 100, you have typed 1000. We can work it out. That is the reason. What is the control? Is that you are going to the filling station? Is it right? You are using your card. Okay, you are using your debit card. When you use the debit card, what that person will do? Person will type 2 times. If there is 150 reals, they will say 150. Again, they will add 150. What? This is nothing but called as a control. Is that this is nothing but if you say 150 and in the second time you say 160, definitely it will not accept. Is it not? It will not accept. Is that's what it says. You see the thing. You are typing the password. Is it right? First, what we are doing? You are typing the password. Is it right? Again, what they will say? You have to retype it. This is nothing but the control. This is nothing but the control. That's the way. Is that you are paying the amount. Is it right? Immediately what will get? You will get an OTP. Is it right? See the things. I am making it very, very clear for you. Is it right? What you are making a mobile payment. Is it right? What you will do? The control key is CVC code. Is it right? Customer verification code. This is the first one. The next is what? They will generate an OTP. Is it right? They will generate an OTP. Again, what you will have? They will send it on the mobile. Which mobile? They will send it on the registered mobile. Then you have to re-enter OTP. In simple words, this is the controls. Is that this is the controls? Is that this is the controls and this is the way it will work. Detection risk, you are failing to detect the material misstatements, error of omission. You remove, you have not entered the error transaction, you cannot detect. Using inappropriate procedures and misinterpretation or results. Is that if you are inappropriate procedures, you are not following the procedures, you cannot detect the risk as such. Is that these three types of risk is otherwise called as audit risk. One question will be there in my quizzes every other time, any time. Is that the components of audit risk? Identify and explain the components of audit risk with examples. Fine. Now you can understand what is the audit risk. Audit risk is nothing but inherent risk, control risk and detection. Now, detection risk is having two different components, a sample risk and a non-sampling risk. We'll cover this. Don't worry about that. We'll cover this. Is it right? Detection risk is, now you have inherent risk, you have control risk. Is it right? Now assume this is the number of transactions you are having. Is it right? Assume you are having number of transactions. What is that? You are, as an auditor, you are not going to check all, you are verify all the transactions. Is it right? You will take one sample. In this sample, you are having how many transactions? 50 transactions. Is that 50 transactions as a, in these 50 you have selected it randomly. Is that you are selecting randomly 50 transactions, and in that there is no error. Is that in that there is no error? What you will do immediately, the second stage, you will increase the sample size. Instead of 50, what you will do? You will say 100. Definitely there is a possibility. Is that there is a possibility of identifying errors and fraud. Possibility, it is not, there is no guarantee. Is that is the detection risk, sampling risk and non-sampling risk. There is one concept is there, we are going to study in detail about this. Is it right? This is called as an audit risk model asset. Is that slowly and steadily? Is right? Slowly and steadily. We are just, nothing is there. We are just focusing on this. Only on the audit risk, audit response, entity of the, understanding the entity and the environment. That's all. Is it right? That's the only thing. Very simple, very easy. Scoring marks is very easy. Only thing is you have to be very, very focused what you are doing. Language is very important. Audit risk is the successfulity of an assertion. I have not told you about assertions. Assertions means what you are the assertions. Assertions is nothing but you are making it a, assertion is nothing but cut off. Is that? Assertion is nothing but there is a valuation. Is that? Assertion is nothing but there is a completeness. You have to assert, getting point? You have to assert that valuation is correct. You have to assert that the cutoff is as per the procedures. You have to assert that there is a completeness. You have to assert that there is a accuracy as an auditor. As an auditor, you have to give that assertion. Assertion means see, your opinion is the final opinion. Your opinion is the final. Your judgment is the final judgment. When you are doing this, you have to be confident in making the thing. We will cover these assertions, okay, at a later stage. They are talking about the assertion, susceptibility of the assertion to the misstatement. How we are talking in terms of the errors as such. That could be of material. Material individually or in aggregate. Is that materially? Either it is one at a time or when aggregated. with other misstatements. See the things. Now I will tell you that individually you are talking about the sales. Is it right? You are talking about the sales. You are talking about some customer A. Customer A. We are talking about this individual. Now what happens? Sales is not only sales now. Sales will be have cost of inventory will be there. Sales will have with respect to the credit sales, cash is involved, inventory is involved. Is it right? Receipts are involved, debtors are involved. So many things are involved in this. It's not only the sales. Means we are talking individual about the customer A and we are talking about the other things in the aggregate terms. Is that assuming that there were no related controls. This is what it says. Means what is the inherent risk? Inherent risk is nothing but the material misstatements, either individually or with aggregate, and assuming that there is no controls. If you have controls, you can minimize the risk as such. Inherent risk is affected by the nature of entity. Some companies don't give that much importance. Some companies don't want to employ skilled people. Some companies don't want to have experienced people. What will happen? Automatically risk will be high. Understand? Automatically what will happen? Risk will be high. If you want to have the risk has to be reduced, you have to employ skilled people. You have to employ experienced people. You have to employ knowledgeable people. Then only what will happen? The risk element will be less. It is the is that, for example, the industry is in regulations. Yeah, is that you are talking about in terms of regulators? Is that it falls under the nature of strategic risk. When you are talking about the regulations? Is that when you are talking about the regulation, international accounting standards, regulations? Is that what example factors which should affect? Management has to be more effective. Integrity. Integrity is what? I told you. What is meant by integrity? What do you mean by integrity? Where you have studied integrity?
Honest.
Honest. Straightforwardness. Is it? Straightforwardness. Honest. Integrity of the management. Inventory valuation in jewelry business. Is there inherent risk? Is that jewelry business? See, everybody cannot do valuation. Is it right? You need experts. Is that you need what? You need experts. Whenever you are talking in terms of some specialized auditing. High cash business such as retail business, risk is very, very high. Is that risk is very, very high when you are talking about the retail business. Got my point? See the thing. You take this example. You are going to any hypermarkets. Is it right? You are going to any hypermarket. I am not talking about the retail, the one standalone store as such. Is that you are talking in terms of hypermarket or you are talking about the malls. Is it? When you go to the hypermarket, there will be a controls will be there. Is it? A control. You are swiping. You are scanning the product. Then you say that no, I don't want this product. Is that what they will do? Can a cashier cancel that product? No. He has to ask the supervisor. When the supervisor will understand this concept, supervisor will come, supervisor will scan his ID card, then he will cancel it, then he will lock, and then only the transactions can be continued. Understand what? This is what we are talking about, the controls. This is what we are talking about, the controls. Everywhere you will have controls. Every other place, even you are using your password, they will have controls. Now what happens? What is the thing? In most of the companies, in most of the softwares, it is like that. You go and you are logging. You are logging your username at your workplace. You cannot. It's not a simple login. Immediately what will happen? An OTP will come on your mobile. If you enter the OTP, then only you enter the system. The OTP is valid for only 30 seconds. Is it? If you are not using it, definitely things will work. This is nothing but the internal controls. Fine. Retail business, cash involvement will be huge. Is it? When you are talking about the retail business, what happens? The cash involvement is very, very high. Is it? Automatically the risk will be high. Technology, it's an inherent risk. Is it right? You have introduced some technology, automatically what will happen? By next year the technology will become outdated. Obsolescence, is it right? If it's not used, automatically what will happen? You are supposed to adapt new technology as such. Is it? What is the inherent risk? When you are talking in terms of the assertions, material misstatements, individually or in aggregate terms, when you don't have related controls. Is it? When you don't have related controls as such, then only there is an inherent risk. What is the control risk? You don't have controls at all. You don't. One man show. One person will do everything. What will happen? There is no controls at all. Understand? By control risk is the material misstatement. Again, it will be at the assertion that could be done individually or in aggregate. Is it? Will not be prevented or detected. Is it? What is the thing? Means when you don't have controls, is it right? Neither we can prevent it nor we can detect it. Where there is a controls, the controls will be with respect to the internal controls. One man is preparing, one man is approving, one man is verifying. What will happen? Nothing is there. That is the reason people will have different, one per task, multiple people. Even you are doing automation, got my point? Even you are doing automation, one person will verify, one person will prepare, another person at some other location, maybe in the same place or in any other place, another person will verify, some other person will authorize. When you have these things, it is nothing but the controls. What are the examples of controls? And this is what we have to remember it. When I am saying remember it, it has to be. We will have the controls by what we are doing. We are doing what? Reconciliation. Any type of reconciliation. Monthly bank reconciliation not reviewed by the manager. You are preparing the reconciliation and nobody is reviewing it. There is no, definitely if I am doing it, somebody has to review my job. Is it right? Somebody has review. Then only there is a control risk. One person is doing and it is not. What is the second one? Very important. I am very slow. Is it right? Purchase invoices not match with goods received note. Goods received note is going to be GRN. Is it? Understand what? You have the purchase invoice. Is it? You have raised purchase invoice. Is it? You have raised purchase invoice. You are purchasing something. When you purchase something, definitely it will be, you will receive that. This purchase and this received should be matched in terms of quantity, in terms of price, and in terms of quality. Is it right? Control has to be there. If nobody is doing this job, there is a risk, and this risk is going to be called as a control risk. References not followed for the new employees. See, whenever you are getting new employee, what they will ask, in your CV you will write references. Is that references is nothing but you are just making a assurance that yes, this person is coming through these people. Fine, that gives you a confidence. If you don't follow this, there is a huge amount of control risk. Just now we have discussed. We are talking in terms of what? We are talking in terms of computer passwords not required to change regularly. That is the reason nowadays we say that every month Is it? Or every 15 days, is that you have to change computer password. We should not repeat the same password. Is that you should not repeat the same password. There are so many conditions are attached to it. Is it right? That is another way of called as a control risk. Is it material risk? Sorry, inherent risk, no related controls. Is it right? Whereas control risk, we are not identifying it on a timely basis. If you do monthly reconciliation, things will be done. Daily reconciliation, is it right? If you are working in the bank, every day you do reconciliation. The moment you do reconciliation, definitely if there is any error, we can identify very easily. Is it right? This is the second part of control risk. The last one, detection risk. Is it? This is the only component of risk. This is the only component of this that the auditors have control over. Are you clear about this? Are you understanding?
Garage. Also,
Are you all understanding?
Yes, sir.
Yeah. Is it right? See that? Okay. You have the detection. Is the procedure performed by the auditor to reduce the risk? Is it right? What we do? We are trying to minimize the risk to an acceptable low level. Will not detect a misstatement that exists. Is it? Means you are detection. You are, when you do this, what will happen? You are trying to reduce the risk to the acceptable, or you are trying to detect it. Is it right? The procedures we will adopt to detect it. That is the reason when we are doing the things, either you are done individually or it is done in a aggregate form. There is little bit confusion will be there because all wordings are same. Okay, all wordings are same. That is the reason you have to identify. I'm underlying the keywords. Is it right? It is a procedure the auditor will perform to reduce audit risk to an acceptable low level. Will not detect material that exists. That could be material. If you are not doing this, we cannot detect any material misstatements. If you do this, then only we can reduce the material misstatements. This is the only component where the auditor will have the control. Because this is what it says. What is the detection risk? What are the two components of detection risk? One is we are talking in terms of a sampling risk, and the another we are talking in terms of non-sampling risk. If you cannot identify an error, what you will do? You will not feel happy. You will say that yes, I have verified 50 transactions, there is no error. Then for your understanding, your judgment, professional skepticism, your judgment, what you will do? No, I will again verify another additional 50 transactions. If you say that another 50 transactions also have no errors, then only you can make an assertion. Understand? But then you can say it is accurate. Unless and until you will not get convinced. Is it? That is what is it. The only component that the audit risk that the auditors have control over. How they will control over? They have the control by increasing the sample size. Isn't it? Now, Note the difference is emphasized between inherent risk, control risk and detection risk. Is that inherent risk and control risk related to material misstatements? Is that inherent risk and control related to risk of material? Inherent means the risk that has been inbuilt within the system. Control means we don't have time, we are not detecting in on a timely manner. Is it right? Whereas detection risk is that auditor will not detect the material. We cannot detect. Is it right? You are saying that you are taking 50 transactions. Is that you are increasing to 100 transactions. Now, if you are saying 100 transactions, if there is an error of omission, you have not entered the transaction at all. Even you are not entered the transaction at all. Even you do full population, full transaction, for every other transaction, you will not detect the risk. Get your point? That is the reason detection risk related to the auditor will not detect that material misstatement. Even you are increasing the size of the sample. Got my point? Three important concepts. I will ask you. Is that I will ask you in the quiz. Yeah, what is the? I will not ask you each. I will ask you the explain list and explain the components of audit risk. Is that right? That is going to be. More importantly, is that I told you, more important, where is there? Yes, I have mentioned here before I go this. Is that before I have done this, I mentioned here. Is that you just focus on this slide. It doesn't mean that you have to ignore other slides. Okay? Is it now it's almost a message, you got it. Is it right? Detection risk is made of two components. One is we are talking in terms of sampling risk, and not how if you increase the sample risk, there is a chance the risk will be less. Is it right? If you are increasing the sample size, by simply increasing the sample size and carrying out more work, and not the only way to manage detection risk. Is that what happens? Assume. Now what happens? You are taking 50 transactions. You will say that you are increasing it to how much? You are increasing to 100 transactions. Don't see if you don't have. If auditor does not have, does not have what? Professional skepticism. Is it right? If does not have professional skepticism, you do it for full transactions, you cannot identify any error. Don't say that I have done so many and I didn't. If an auditor coming and saying that there are no errors at the client place, it means that auditor has not done the job. Very simple and very clear message. Understand? But this is what we are understanding. If the things are there, I say that yes, everything is fine at the audit place, at the client place. Does it mean it can happen like that? Never. That is the reason. I don't know how many of you are doing this. Maybe if you are working or you are doing in an audit department, audit job, every month they will have an internal audit report. Is that every month they will have an internal audit report? Internal audit report, there will be some queries will be there. Is that right? Every time there will be some mistakes will be there. There is no guarantee, there is no 100% that mistakes will not be there. Is that? It says very simple. What it says? It says that it is a function of effectiveness of an audit procedure. How far you are effective and the way it applies by an auditor. How an auditor is effective That is the detection. If an auditor is effective, definitely you will be in a position to detect the risk as such. Got it? If you are in a, that's the message you are talking about. Is it right? The effectiveness of the auditors as such. It says the sampling risk, they are non-sampling risk. Is that as simple as that? I'm giving you the things. Is it right? Again, I will write. These are all the transactions have been there. Is it? These are all the transactions. What you will do? You will say, yes, I am taking a sample. Is it right? I will taking the sample of this. You will not find any errors. Is it? What is the next step? Now, next step is you will increase the sample. Is that first you have taken 50, you will increase to how much? You will increase to 100. If you are not there, you will try. You will say that I am going to do 140. I am just taking an example, okay? Don't say that how you got 140. I will take a 140. If you are not getting 140, again you will check another set. You will take another set of entirely different 20. You want to make sure that things are at the acceptable low level. Is it? Sample, if you are using a sample non-representative of the population, there is a sampling risk. What is the non-representativeness? Is it? Non-representativeness. What you are doing? Now, I will take the same example. I will put the thing. Here we are talking in terms of what? You are talking in terms of sales. Is it right? Now, we want credit sales. Is it right? We want credit sales. But when we want credit sales, we have to identify where the credit sales will be there. Assume we are not doing. Here what happens? Here the cash sales are more and the credit sales are less. Is it right? If the cash sales is more in this sample and the credit sales is less, you will identify, assume very clearly, cash sales are 45 transactions and credit sales are only how much? 5 transactions. Put it as a 50. Okay? Put it as 50 transactions. Now, you are having only 5 credit sales and you are talking about that we are very much interested in credit sales. Can we detect errors in the credit sales? We have only very small sample. In that case, your judgment is there. You will say that, yes, here what happening? You are having 100, total transactions are 100. In 100, how many credit sales transactions are there? Credit sales transactions are 65. Cash sales are how much? Cash sales are 35. If that is the case, there is a possibility of detecting the errors. Is that there is a possibility of detecting the errors. This is what called as a professional judgment. This is called as a professional skepticism. Is it? That sample chooser, how we are using the sample size as such. Refer video once it is done. Then only you will enjoy. The moment you are just going through it, coolly sit down. It is 2 hours video recording. Okay, 2 hours continuous. You just sit down, you listen to it. Once you listen, you will not have any doubts. Take my word. Yeah, there is a misstatement in the transaction not selected as part of the sample. What happens? See, you are going to the client place. What the client will do psychologically? Client will say that come. You take these samples. You take this. Client want to give you those samples where there are no errors. You should not depend on that. You should not say that you will have your own judgment. Otherwise, what will happen? the sample selected by the client and is given to you, the risk is very, very high. The sample selected by as an auditor, the sampling risk is very, very less. Is it? This is what we are talking in terms of only the sample. Now you can understand how important is that? How important is selection of sample. Fine. Second one. What is the non-sampling risk? This much is you just work on it. It makes sense. Okay. Inappropriate. You don't know the rules. You don't have any knowledge. Auditor doesn't have any knowledge. Auditor doesn't have any experience. See, auditor will not become auditor by qualification. Is it right? Auditor, anyone will become more professional based on what? Based on experience. Is that the more you get experience, the more you will have your questioning mind. Got my point? That is what it says. You follow the procedures. What you have to do, first, second, third, fourth, automatically things will be easy. Is it? Failure to carry out audit procedure correctly. We don't have, see, I told you, what is the, assume you are talking in terms of sales. I will give the same example. First, what you will do, you will have the invoice. Is it right? You have purchase order, sales order, all those things will be there. Yeah, you will have the invoice. Is it right? Then you will have the you will deliver. Is it right? You make a bill. Is it right? Then you will deliver. And then you will have acknowledgement. You have to follow invoice. Invoice should be matched. I am not using the word check. Okay, no use of check. It has to be matched with bill. Bill has to be matched with delivery note. Delivery note has to be matched with acknowledgement. If everything is matching one to one, then the procedure is correct. If you are just taking only delivery and acknowledgement, the procedure from where you are matching the delivery with that is a source document. It's very important. Is it right? That's what the sampling risk. No, sorry, non-sampling risk. We are talking about results are wrongly interpreted. Is that we don't have sufficient knowledge. Is that we don't know, as the auditor doesn't know about the gross profit ratio. Auditor doesn't know about the entity as such. What he can do, he cannot do as such. He will give wrong results. Is it right? Results wrongly interpreted and failure to carry out what? To carry out the audit procedure. Mostly in all the cases, is it right? In all the cases, we are talking in terms of what? The procedures. What is the procedure? We have to use it. Is it? Keep this in mind. Very, I can say $1 million word. Okay? Audit procedures. Is it? For sales, there will be audit procedure. For inventory, there is audit procedure. For receivables, there is audit procedure. For assets, there will be audit. Everywhere there will be some procedures. Got my point? Now, when you do the thing, how we are very much focused on detection risk. Is it right? How the effectiveness of application procedures be improved to reduce the thing. You should have in general, is it right? In general, you should have a planning. You should have a very experienced staff. You should apply professional skepticism, questioning mind, and you should increase what? You should increase the supervision and review. Yeah, you should have planning, experienced staff, questioning mind, supervision and review. Okay. Now almost we have done with this. Is it right? Now, what the rule says: control risk and inherent risk together make up of risk of material misstatements. Is it? Control risk. Now detection risk is different. Is it right? Now you see the thing. Control risk is because of adequate controls. Is it right? Inherent risk is because of the inbuilt risk. Is it right? Whereas control risk is we are not working it on a timely basis to review the internal controls. Is it right? That is the control risk. It will have impact on what? It will have impact on material misstatements. Audit risk always set to a acceptable low level. Wherever I am putting it in bold letters, those are the keywords. The auditor giving the wrong opinion should obviously as low as possible. See, it's very rare cases. Is it right? It is very rare cases where you are going to give some negative opinion. Is it right? Very rare cases. Is it? What are the different types of opinions are there? One is, what is the different types of assurance are there? Fast.
We have reasonable assurance.
Pardon?
Limited assurance. Reasonable opinion.
Reasonable assurance. No opinion. Here we should not write opinion here. We should write reasonable assurance. And the second one is?
Limited.
Limited assurance. Is that reasonable assurance and you have a limited assurance. That's the reason. Now you understand the thing. You have to make it a point that the risk should be at this acceptable low level. There is a risk. There will be error. That is the reason. Whenever you make it a point, what you are doing, you are saying true and fair. We never ever say it is correct. They will say what you are doing. We are talking about whether it is a high risk, whether it is a medium risk or it is a low risk. Is it? Whereas you are putting, that is the reason when you do the things, is getting your point. When you do the things, again I am writing for your understanding. Is that they will say what? They say inherent risk. Is it right? They say it is a control risk. And they will say it is a detection risk. Again detection risk, you will have a sampling risk and non-sampling risk. You are identifying detection risk as a separate element. Detection risk is the balancing figure in the audit risk. Is it right? What is the difference? Is that if the inherent risk and control risk is high, is it right? Listen carefully. Multiple MCQ, they will ask you this. Is that the MCQ? They will twist you this question. Is it right? MCQ. Specifically, the examination question is there. If inherent risk and control risk is high, the detection risk will be low. Is that means? If you are identifying more errors, means you are not having any detection risk. Understand? You are identifying errors. You are identifying the controls, that there is a misstatements in controls. Is that there is mismanagement in controls. You are identifying that there is a inherent risk with respect to reconciliations. Is it right? You are talking about reconciliations. You are talking about it's not matching properly. It means if the risk is high, inherent risk and the control risk, it means the detection risk is very, very low. Means the risk related to detection means you are identifying the risk to the maximum extent, and automatically what will happen? The audit risk will also be low. Little bit thinking to be needed to understand this. If the inherent risk and the control risk is high, that means that you don't have any controls, you don't have anything. It means that what? There is no possibility of having any detection risk. Is it right? There is no possibility, there is no controls, there is no detection. If there are controls, you can detect. If there are no controls, there is no detection. Get it? Then the audit risk will also be very, very low. This is the thing that matters. Is right? That is the reason when you are talking about the things, audit risk is have these two goes for what? These two goes for material misstatements. Is it? These are not under the control of auditor. Is that? This is why, as they say, when we are talking about inherent risk and we are talking about control risk, what we are doing, we should make sure that you should understand the entity and its environment. Is that? You should understand the entity and its environment. Is that? Then only what will happen? Then only it makes sense. You will be in a position to detect the control risk. Fine. That is one segment. Okay. What we have done? We have done audit risk. We are talking about what are the different elements of audit risk and what are the examples of audit risk and how the audit risk is going to be segregated. Fine. Second one. The second component is that we are talking in terms of what? Materiality. First, initially in the beginning, I'm just making it very clear, okay? Making it very clear. There is an error, is it right? There is an error of Omani Riyal 10,000. Is it right? Comparing to sales. Is it? Assume the sales is going to be 500,000. Okay, immediately you have to compare. Keep calculator with you. If it is acceptable, just take it out. Okay, into 100. How much you will have? You will have 1, 2, 3. How much it is? It is going to be how much? 1, 2, 1, 2, 3, 1, 2, 3. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 10 by 5. How much you will get? 10 by 5. It comes to how much? It comes to 2%. Fine? Now, assume it is going to be 100,000. Sales is going to be how much? 500,000. Is it? 10,000 is the material misstatement. Is it? 10,000 is nothing but the material misstatement. Is it? This is the material misstatement. Very clearly I am saying this. We need to do calculations. Two different types of calculations are there in this lecture. Is it? If you take this one into consideration, what will happen? 100 divided by 500 into 100. Is it right? 2, 1, 2, 3, 4, 1, 2, 3. Okay. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 100 divided by 5. It comes to how much? 20%. Is that right? there is a criteria for sales. How much I told you about sales? In the beginning, how much I told you? I told you that the materiality should be less than 1%. It should be less than 1%. Profit before taxes less than 5%. The criteria is there. If it is less than 5%, it's not like there is not an error. It is the material misstatement is at the lower level. Understand? But don't say that we should not assume that it is ignorable. No. Material misstatement is at an acceptable low level. That's what the message. What is the materiality? Financial statements which are misstated materially misstated will not give a true and fair view. Auditors must check all material balances. Is it all material balances? When they say all material balances, sales, very important. You have to check. Is that you have to take into consideration the profit after taxes, assets, equity. Is it right? We should make it a point that these transactions have to inventory, very much material. Is it right? Why we are talking about inventory so much? Inventory is the one of the major component of the sales. Is it right? You take any manufacturing companies. Is it right? Any trading companies. Is that you take about the retail stores. Is that inventory is very important. Without inventory, nothing will happen. That is the reason you have to mention. Is that they are going to have two different classifications. Is it right? We are going to have two. The first classification is in terms of a general one. The second classification in terms of performance. Materiality. Whether the misstatements, make it simple. The materials misstatement is omitted individually or aggregate. Alright? It means it is identified as individually or in terms of aggregate. It influences what? It influences the economic decisions. Is it? Information is material. Amount is material. Amount is noticeable. See, I am telling you simple words. Is it? Amount is material. Amount is significant. Is it? If it's omission or misstatement, if you are omitting it or you are misstating, error of commission, error of omission, error of principle. Fine? Either individually or in a group. Means either one or more than one will have economic decision. Economic decision is nothing but economic decision is nothing but we are talking in terms of what? We are talking in terms of profit or loss. Very simple. Is it? Materiality. Is it? In terms of financial state. Is it? Now, what is the performance materiality? Is it? What is the performance materiality? An amount set as less than materiality for the financial statement as a whole. Performance materiality in terms of sales, in terms of profit after taxes, in terms of assets. If we take this into consideration, the whole calculations, is it? The whole calculations we are taking into consideration, this is going to be called as a performance materiality. You are what you are doing? You are checking the performance. Listen carefully, remember this. Understand? Remember this. Things will be open. The moment we start doing the questions, you will understand the importance of this. Automatically, you will be in a position to answer the questions without my support, without my intervention. Is it? Means the performance materiality is very, very significant. We are going to make it very, very specific. Is it right? An amount set a less than materiality. It is not material. Means if it is 20%, we are taking 5%, 1%. It is less than the materiality. Is it right? As a whole, whether the risk that the aggregate of smaller misstatements, is that one by one you are talking about, you are making, you are, is it? You are talking in terms of, don't say that they are smaller mistakes. Is that? It is not a smaller mistake. Smaller mistakes will be 1, 2, 3, 4. But if you put all the smaller mistakes, it will be in a larger number. Is it right? Individual means smaller misstatements in individual or account balances or classes of transactions. See, these are little bit technical words. We will cover this. Don't say that we will do it at the appropriate level. Okay, I'm telling you because we are not covered this till now. Is that we want to make sure that is it that what we have performance materiality. See, performance materiality assume you have customer 1, is that customer A, customer B, customer C, like this. Is that what happens here you will have the difference, is that assume you will have the difference between the invoice, is that between the invoice and between the receipts. Is it right? You will have, assume you are having a difference of 10 riyals, a difference of 5 riyals, a difference of 2 riyals, a difference of 3 riyals. We will say that these values are less, but that is not the case. If you add up all those things, it will become how much? It will become 20. That is the cause of concern. That is what either individually or in aggregate terms. That is the reason every time we are talking about this wording, is that either individually or aggregate, whether it is smaller account balances or a classes of transactions. We should not think that it is only 2. 2 is individually, but you add 2 to the total, it will become 20. 20 is a very horrifying figure, is it right? It is a cause of concern, is it right? 2 is not a cause of concern. So you should not ignore individually. No, once you ignore individually, it makes lot of difference. An error is happening individually or in aggregate terms, whether it is a smaller transactions or it is a class of transactions. It will have a material misstatements. Definitely it is called as a materiality. Is that it is called as a materiality. Just keep this. We will have every question, whatever we are going to discuss, every examination question will have this. What is materiality and why does it matter? Is it right? We complete these concepts and we'll stop here. Is it right? The concept of materiality is the basic, fundamental one. See what we are doing. You are doing audit. Is it right? When you are doing audit, is it? When you are doing audit, the purpose of audit is it right? The purpose of audit is we have to identify what are mismatching. Is that the purpose of audit is you have to identify what are the errors. Is that the purpose of audit is you have to identify the material misstatements. We have any other objective beyond this? No. Is it right? We don't have. Means this is the fundamental one. The concept of materiality is the fundamental. How much difference you are getting. Is it right? We will say that yes, if you add up the things, it will be this much. That is the concept of materiality. Is that you are doing audit for one department, fine. But if you add all the departments, how ultimately we are having one financial statement and we are not having a individual financial statement. Remember the audit of what is the objective of audit in the first slide we have done. Is that we are talking in terms of what? To express the opinion on the material statements. Sorry, opinion on the financial statements. In terms of all material aspects, whatever we are talking about material aspects. We are always focused on the amount. We always focus what is the invoice amount and what is the bill amount. What is the bill amount and what is the amount we have received. What is the amount we have received and what is the amount we have deposited. We make reconciliation. Why we are making reconciliation? To reduce the risk. Why we are making reconciliation? To make sure that the audit risk will be at the lowest level. The external auditor cannot test each and every transaction and balance that makes the financial statement. This would simply not feasible and it is not cost effective. The external auditor cannot check all the transactions, is it right? Where they will do the sample. When you are doing the sample, definitely there will be a provision, a probability, a possibility of having the errors in terms of materiality. This concept is otherwise called as materiality. That is the reason we always, all from this lecture till the last lecture, we will only cover about the material misstatements. Is that we only cover about the material misstatements. Fine? Okay. I will cover this slide and I'll stop. Okay? Should I continue or should I stop? You tell me. I know. If you are exhausted, tell me. Otherwise, we can complete this fast. I know.
Sir, I think it's better to
Huh?
stop here for today. It's better to stop here for today.